Hey, good afternoon, everyone. My name is John Jimenot, EVP of Production here at Angel Oak Mortgage Solutions, and I know it's probably past the allowable date, but I'm going to wish everyone a happy New Year. So, even though it's what, the 16th of the month. So, but we haven't seen anyone since December on our webinar. So, we're going to do a deep dive into bank statements today. We're going to teach you, what to look for on the 1003, the credit report, how to submit, how to market. And then our subject matter experts are going to answer any questions that you guys have. We'll get started here in about a minute. So hopefully everyone had a safe holiday. And if you are joining us from California, I hope you and your family and loved ones are safe out there in California. So really excited about 2025. I know the Mortgage Bankers Association is predicting or forecasting, not predicting, forecasting a 20% increase in total originations. Well, I can promise you here, if anyone in the non-QM space is forecasting less than a 50% increase over 2024, you're in the wrong business. So we're really excited about 2025 and the non-QM space. So give it about another 30 seconds. Couple of housekeeping rules here. This is going to be recorded. This is not a PowerPoint presentation. This is all live. We're going to do everything from our website today, and we will get this recorded out to you before end of day tomorrow. If we don't get to some of your questions, we will have your account executive reach out to you to talk about the question that did not get answered and possibly talk about doing presentations on your behalf, which I don't want to jump ahead to our marketing portal. So we'll get started here in about 15 seconds. Still people logging in. I appreciate that. I think next week we're doing a deep dive into, yes, next Thursday we'll be doing, I'll do a shameless plug here. Next week we're doing a deep dive into our debt service coverage ratio, which has become the most popular program so far month to date. So I got you there, Kim. So, all right, let's get started here again. My name is John Jimenot, EVP of Production here at Angel Oak Mortgage Solutions. I've got two of the greatest subject matter experts on our call with us. Kim, please introduce yourself and give us a background on your career here, not just at Angel Oak, but in the lending business.
Okay. Hi, Kim Gilder, Angel Oak Mortgage Solutions. I manage the Virginia region for Angel Oak. I've been here for 4 years. I have 30 years in the mortgage industry, from customer service through underwriting. So there's not one portion of the mortgage part that I don't know about or have not done at some point in my career.
Wow, Kim. And Kim is a top producer here. And she said 4 years, and I got to admit, I was taken back by that. I feel like you've been here longer than that. And it's probably because how quickly you've, rose through the ranks and are a top producer here. So congratulations, Kim, on another successful year. And I can't wait to see your production through 2025. Oscar, always a stable on these webinars. So introduce yourself, Oscar.
Hey everybody, happy 2025. My name is Oscar Ungo. I've been with Angel Oak for about 7 years now. I'm excited. I'm always excited to be on these calls. We can't wait to show you how we streamline pre-qualifications for you on bank statement loans and get them to close it.
Yeah, thank you, Oscar. And I always appreciate your time and jumping on these, and Kim also. So before we get into the highlights of the programs, we're going to launch a poll here. So, and really the poll question is, who have you originated a bank statement loan in the last 12 months? So while you are participating in this survey, Oscar's always one to remind me, about how many new business applications get formed every month. And since COVID, everyone knows what happened during COVID. People said, you know what, they lost their jobs, or said, this is a great opportunity to start something I really was passionate about. That is a perfect timing from COVID. Since COVID, new business applications have grown 25% and continue at a steady pace, continue to grow. And I think the last time we took a number, Oscar, was 431,000 new business applications just in the month of June of last year. Yep. So, and Florida is, I think, the #1, California is #2, and Texas is #3 for those new business formations. So They're not slowing down anytime soon. So this is the fastest growing segment of qualified borrowers today. So, wow, here we go. Here's the stats here. 53% have not originated a bank statement loan in the last 12 months, which is usually it's closer to 65 that have not. So hopefully everyone's getting on that non-QM bandwagon and really, and hopefully 2025 is the year you break out in your non-QM business and hopefully bank statement borrowers. So let's get into the website, and Kim's going to cover the highlights of our bank statement program. How about it, Kim?
Okay, so if you haven't figured out, Angel Oak loves our self-employed borrowers. There's actually more self-employed borrowers than there are VA borrowers. So put that in your hat when you're out there looking for new business. These are a great way to capture that self-employed borrower who does not qualify based on their tax returns, has not filed tax returns, or has a tax commitment that they can't purchase a house and pay that commitment. So with that being said, we actually now go up to a $4 million loan amount on a bank statement program. That's phenomenal. We start as low as a 640 score. We go up to a 90 LTV that requires a 720 score. So we can do a bank statement program on a purchase, cash out, or rate term refinance. So there's a lot of different ways that you can help your borrowers. We can do 12 or 24 month personal or business statements. Really, there's no difference between pricing on a personal or business. We're really looking to capture where they're depositing that business income. We look at a percentage of business ownership. For a business bank statement, we can use up to 50% ownership and greater. If they own less than 50%, we go into a personal bank statement. What's great about the self-employed bank statement program is we are generous to them. We allow 2-year seasoning on foreclosure, short sale, and bankruptcies, where if you know in your conforming box, that doesn't always work. We have a 1099 option. P&L we're going to talk about in a little bit. We can do both permanent and non-permanent residents. And if you haven't heard in this last week's email that went out to everyone, we're no longer requiring visas on our non-perm residents. So that's big. So, put that in your pocket as well.
I thought you were going to say put that in your pipe.
Well, I thought about it. If you notice, I hesitated there for a second. So again, there's always going to be an expense factor associated with the loan. So as a standard, we use a 50% expense factor. It's basically no questions asked. If they have $20,000 a month in income, we give them a 50% expense factor. And if that works, we're marching down the path, we're issuing the pre-qual and moving on. For 1099 borrowers, we can actually go down as low as 15%. So there's a lot of different ways as account executives here, we're looking to make this work for you. And probably one of the newest things that I really wanted to talk about, because this is huge for self-employment, we now allow a 1-year self-employment program. And how this works is if the borrower has been in the same industry for 2 years at a minimum. So for example, if they are were a computer tech guy, W-2, now they're a 1099 computer tech guy, and they've done it for a year, we can actually do that loan under a bank statement / 1099 program. So, here at Angel Oak, we are really looking at every possible avenue that we have to help you capture that self-employed borrower.
Yeah, Kim, that's a great example. Some other examples are, doctors, maybe they're still doing their rounds at a hospital, and they started their private practice 12 months ago, or, we went through, I'm here in Dallas, but, Florida had that hurricane a while back. So you had some roofers who may have worked with a roofing company and said, you know what, I see a big thing of owning my own roofing company and doing a lot of replacement roofs. I'll do that. there's so many, contractors, there's so many different truck drivers, there are so many different businesses that this can affect. And all we're trying to do today is really spur ideas and, maybe add non-QM to your marketing plan. And we'll talk about that. Danny's asked a great question. Do we have a database of tax preparers? And we'll get to that, Danny. You're jumping ahead, but it's a great question. And we're going to talk about that when we get to our marketing portal. So Kim, thanks for delivering those highlights and anecdotals there. So Oscar, talk about, we want everyone on this call to be basically a subject matter expert. Obviously it's going to take them time, but let's talk about what you want to see on a 1003 and then roll into what you look for on the credit report.
Yep. Before I do, I wanted to piggyback off of something Kim said. Something that we rolled out, we no longer have restrictions. We don't ask for the visa for non-permanent resident aliens, but we also have no restrictions on the EAD. So that's huge, and take advantage, jump on that as soon as you can. Also, for all those who specialize in refinances, we do see plenty of refis on bank statement loans. We'll do up to 80 loan to value, but on a primary, second, or investment property. We have unlimited cash out or cash in hand at an LTV of 50% or less. And we'll do up to 2 million cash in hand between above 50 and just below 60% LTV. So
yeah, Oscar, I'm going to interrupt you there because we were talking about this on a call the other day, and that's huge. So, unlimited cash out. Everyone, cash is king these days, right, Oscar? So just please repeat that if you don't mind.
No, not at all. So unlimited cash out at an LTV that's 50% or less, so cash in their pocket, up to 2 million, just above a 50 LTV up to 60. So that's huge. Definitely take advantage of that. And I'm also going to plug here our bank statement HELOC that we offer. Whenever you see a follow-up, training that we do every month, that's going to be specifically on our business bank statement HELOC, do take advantage of that training because we're seeing a lot of those transactions and a lot of demand for that.
Can I just add one more thing that I forgot, because this is also really important?
Absolutely.
We have a bank statement review team who actually underwrites our income upfront. That is also huge. For you as an originator, you're not trying to figure out what the income is. Oscar and I don't have to worry about figuring out the income. The income is underwritten upfront and prior to the approval, so that provides a clear transition through closing.
Yeah, and that's key. And I'm going to ask Oscar this question because I know he knows the answer. But Oscar, as Kim mentioned, we're going to calculate that income for you at the pre-qual stage, and it's going to be used all the way through the entire process. Will we do a pre-qual on a TBD?
Yes, we will.
Yeah.
And the 1003 does not have to be signed. So we've been specializing in bank statement loans for now over 10 years, and we've streamlined the process within those 10 years. And part of that is the income calculation that we're going to do at the pre-qualification stage, as Kim mentioned. So you're going to be collecting the bank statements. You're going to take the application. The 1003 does not have to be signed. You just print it to PDF format. If you can send us a tri-merge, a hard pull, or we can accept a soft pull for the pre-qualification as well. And you submit that through our website. You do not need to log in. It's very simple and very quick. This way you get yourself in line for calculation. The calculation gets done, and then your AE is going to review everything, all the information that you sent them. And so it's really important to complete that application with all the information that we're going to need to make a good decision. So the 1003 does not have to be signed. You can leave the income blank. Please have the employment on there. And the analogy that I use is whenever you're completing an application to run DU or LP, you want to make sure to have all the correct information on there. This way you can get yourself your approved eligible. Well, we're not running DU or LP on our bank statement loans, but your AE is proofreading it to check if your borrower meets the initial program requirements. So you do want to be detailed on the 1003. This way you get a good result. And then we're going to send you what's called our quick qual, which is essentially is a pre-approval for your eyes. It's going to have the rates and the terms for that day. It's also going to contain a loan submittal checklist. So you're going to know what documents you need to start collecting from your client in order to prepare to submit to underwriting. And it'll also have your next steps for you to request the loan estimate. Now, as far as what we need for credit, what we look for credit, Kim mentioned that we go down to a 640 FICO score up to 75 LTV. We'll go up to 720 FICO score up to 90 loan to value. We talked about the flexibility that we have for recent housing events or credit events with 24-month seasoning on the bank statement program, so we're flexible. We are okay with a 1 times 30. And if you ever have an exception, or if you have a question because you feel like this is a good loan, part of what we do is we also work in the gray. We're not completely yes or no. Sometimes we do need we can manually underwrite it. We always manually underwrite loans, and we will look at them to see if we can make exceptions. And part of that pre-qualification phase is where your AE is looking at the file, and in case there's something that may not necessarily fit the 4 corners of the matrix, but we know that we can get an exception for it because there are compensating factors on it, we're going to ask for it. Sometimes we're not even going to mention it that we're asking for it. We're just going to come back with the good news that we've got you the pre-approval and we got you the exception. And this is all done before you've even requested disclosures. So you've saved time requesting disclosures. Hopefully you've saved your client money from ordering appraisal, and you haven't had to go through and submit your loan to underwriting and wait turn times to find out whether or not we can get the loan done. You're going to know within 24 hours.
Yeah, Oscar. So Victor's asking a question or a follow-up question. You mentioned a soft pull, right? We know how much credit reports have escalated in price, and we may not condone it, but will you do a pre-qual off a soft pull?
We will do a pre-qual off a soft pull. Like you said, we don't condone it because we would prefer to have the hard pull. This way we can make sure that we leave no stone unturned, and we have a solid pre-approval, but we can.
Yeah, but Oscar, the biggest thing is, and you might have mentioned it when you talked about credit, and I apologize if I missed it. We'll use the lower of the middle score. So, so if you are doing a soft pull, it's going to give us 1 score. So we don't know what those 2 other scores are going to be. But I would say if you get that pre-qual back and it's looking good, and you want to make sure you have it, then obviously you can have that conversation with that borrower to talk about allowing you to do a full pull credit report on them. So Kim, I know you're nodding your head. Yeah, anything you want to add on that comment?
Yeah, the only thing I wanted to add to the 1003 application, and this is great, if you have a spouse who is self-employed and a W-2 spouse, we can actually do a combination bank statement and W-2. Again, no tax returns, nothing like that. We execute a 45-6 on the W-2 only. You can have a borrower who has 2 businesses. We can look to use both businesses as long as they're not commingling funds between the 2. And if you have 2 spouses and they both own businesses, we can look at both businesses in a way to try to get them approved.
Yeah, you just answered Peter's question, hopefully. So that's great. And as long as that self-employment income could even be for versus that spouse, or it can be for themselves. There's a lot of people out there with that gig economy. We talked about doctors, roofers, whatever. Maybe they don't want to give up that W-2 job. As long as that self-employment income is 30% of their overall production, we'll allow them to go on bank statements, which I think is huge. And Oscar mentioned this earlier. Over 20% of the deals we close here at Angel Oak don't meet our guidelines. Somehow, some way, through Kim's expertise, Oscar's expertise, all of our account executives' expertise throughout the country, they're able to work with you and your borrower, along with, we've got a credit desk help desk on the back end. And guess what? If we get that exception up front, that exception, like Kim mentioned, that income's going to follow that all the way through the underwriting process. That exception's following that file all the way through the underwriting process. So we're not going to ask for, hey, you got an exception on this. No, we keep it in our database, and we're okay to proceed with that exception. So anyway, a lot of great questions coming in. Let's grab a couple of those. One of the questions here, Oscar, I'm going to ask to you is same LTV for non-perm, and then also are ITIN borrowers allowed?
Non-perm, the max LTV is 75%. And we don't, I'm sorry, it's 80%, and we don't allow ITIN. Yeah, sorry about that. Because ITIN is 75%, but that's full doc only. We don't do ITIN on bank statement loans. Non-perm is 80% LTV.
Thank you, Oscar. Do we offer, Kim, I'll ask you this. It's really, we're talking about bank statements. We do have a bank statement HELOC program. So I'll ask Eric's question here. Do we offer HELOCs on 3 to 4 units for investment properties?
On 3 to 4, no, we don't on a HELOC.
Yeah, so sorry about that, Eric. But one of the things I do want to add here is, HELOCs have been out about a year now. Am I wrong there, guys? Maybe a year, a little longer. But as long as we continue to get, and I believe HELOCs are going to be, we're not going to see rates drop. Who knows how much in the next 12 months. But as people continue to build equity in their homes, they're going to want to tap that equity in their homes. So anyway, where I was going with that, as long as we continue to see performance on these loans, we're always going to roll out enhancements. And I think a couple of enhancements we might have coming could be for borrowers that own less than 50% and allowing them to use business bank statements. And expense ratios are going to be potentially changing in the next 30 to 60 days. So stay tuned. So little teaser there. So Oscar, let's talk about the 1099 program and maybe why you would go 1099 versus bank statements, Oscar.
1099 is a great option for those borrowers who may not have an LLC, they don't have an S corp. So rather than using their last 12 or 24 months of bank statements, we're going to look at the last year or last 2 years of 1099. And as Kim mentioned, we will apply a 15% expense ratio, flat 15% expense ratio for those 1099 borrowers who work from home, have very low overhead or no inventory, and have no employees. So the flat 15% expense ratio is for them. We still require verification of their ownership percentage and how long they've been in business, but that's it. So as far as the program requirements, they mirror our bank statement loan program requirements. The process is still the same. We're going to calculate the income. Now, we do need a year-to-date earnings report for 1099. If for any reason they are not issued a year-to-date earnings report because they may not work with a company like a Paychex or like Paychex, then you can send us the year-to-date bank statements, and then you can just have the conversation whether or not a bank statement loan or 1099 loan is better off for the borrower. You definitely want to consult with your account executive on which direction to take.
Yeah, so Oscar, the question hasn't been asked yet, or I'll ask this to Kim, sorry. NSFs, what do we allow in a 12-month period or a 24-month period, and what would you just suggest if they were over the NSFs?
Well,
so you caught me up, and plus I think my camera's frozen, so I promise I'm smiling.
It's not one of those old ones. No, it's all good.
With the NSFs, I think it's 10 within a 12-month period, but correct me if I'm wrong.
Right.
However, if you're less than an 80 LTV, we allow unlimited NSFs.
Yeah. And Kim, again, this goes back to the exceptions that we have. If you have 12 in the last 12 months, but maybe none in the last 8 months, our knowledgeable AEs are going to maybe run that up the flagpole to see if they can get an exception. And Oscar, that's probably a reason why you might go 1099, right?
Right.
And Oscar, on top of that, there was a question back here. How do we look at large out of the ordinary deposits?
Well, if the deposit's atypical, like you said, large and out of the ordinary, and we can't count and we can't bet that it's going to happen again because we just don't see a pattern of it, then that's something that's going to be excluded. Now, if we can see a pattern because the business may be seasonal, then that's something that we can include. But if it only happened, let's say, one time in a 12-month period, we can't bet that that's going to happen again the following year. So when our reviewers look at the bank statements and calculate the income, if it's an atypical deposit, it's going to be excluded. It's something that your AE will share with you, and if you have some sort of documentation to verify that it's something that does happen often, then it can be looked at.
Right. Give a shout out to Don T. I think he's on this call. So Don, hope you're doing well and Happy New Year. So all good. There was another question here. Kim, I'll ask you this question. What if one borrower has no credit score? Can they be on the loan?
Unfortunately, we don't have a no credit score program. We require a minimum of 2 scores for a borrower.
Yeah, thank you, Kim. Unfortunately, we can't do everything, right? So that's just. But the beautiful thing about that is we're not going to tell you to send in a file. We're not going to tell you borrower to put down earnest money. We're going to do that up front at the pre-qual stage. So we understand what that referral relationship is like, and everyone involved in the transaction, not just the borrower, but the referral source. And we're gonna do everything to make that loan bulletproof when it hits the front door of Angel Oak. So just want to make sure everyone's aware of that. We asked that question. Sorry, guys, going through these questions coming in fast and furious, so thank you. Prepayments. Oscar, someone's asking about a prepayment penalty.
There's only a prepayment penalty on investment properties in states that allow them.
Yeah, and I know, Kim, you probably get a lot of these down here, and I know Oscar might have mentioned it when he was talking about LTVs. You talk about our investment property and second homes and the LTV we go up to there.
So on a bank statement program for second homes and investments, we actually will go up to an 85 LTV. And there's no mortgage insurance on anything. I get asked that a lot. Anything that we do over an 80 LTV, we don't require mortgage insurance.
Yeah, we've been doing this so long, Kim, it's almost like we forgot about mentioning that anymore. Like there's no mortgage insurance on any of our loans that we do in the non-QM space. So Oscar, questions about reserves. What do we require for reserves?
6 months reserves only on the subject property. And then another common question that we get is gift funds on a primary residence. We do accept gift funds. It's 5% of the purchase price and 6 months reserves. As long as those are our borrower's own funds, the rest can be gifted from a relative.
And I'm going to pick from that if you're doing a cash out deal, that cash out can be used as your reserves.
You guys are good. You guys are good. So Kim, I was going to ask a question now I forgot. I'll ask ones that usually get. Do we offer? I know what it was. Can you touched on them when we went over the highlights of the bank statement program. Touch on expense ratios and kind of where we are today. I think it might be changing 30 to 60 days from now, but talk about, you mentioned earlier when you went over the highlights, we default to a 50%. When would we go down to, 15, or some cases we might have to go higher?
So again, 50% is the standard. If that works, your account executive is going to run with it and we don't have to worry about anything else. Let's say you have a self-employed borrower who really has no overhead, works from home, is not paying for office space, employees, or anything like that. With the CPA letter, we can actually go down as low as a 15% expense factor. And then on the other spectrum, if you have somebody who owns a restaurant and has 40 employees, that can actually go up to a standard 70% expense factor. Again, as AEs, we're doing this for you. And that's where the completion of the 1003 is really important, because we're looking at everything that we can from this borrower to find a way to get an approval on it. And these are the questions that we're going to be going through with you up front.
Yeah, thank you, Kim. Oscar, really really good question. Asias, not sure if I'm pronouncing the name correctly. We haven't talked about this in a while, and I appreciate the attendee bringing this up. Talk about delayed financing.
Delayed financing. So if your customer has purchased a property and they've owned it less than 6 months, we can go up to the max loan to value that they credit qualify based off of a purchase LTV.
Not sure what happened there.
And we're going to use the lesser of the purchase price or the appraised value.
Yeah, I don't know what happened. My screen either jumped or.
That's okay. I have a frozen face.
Kim reminded me to, something that Kim said reminded me to mention, hey guys, for those of 47% of you that have not done a bank statement loan in the last 12 months, and if you haven't done one, the 3 most important questions when you do the initial consultation with your customer, that initial call, the 3 most important questions that you need to ask your customer up front. How long have you been in business? What is your ownership percentage of your business? And you want to talk about the expense ratio, because you want to educate them and let them know that the lender is going to count how the lender calculates the income. And we apply a 50% expense ratio across the board, but we do give them the flexibility of letting us know what that percentage is. This way, you know in what direction you need to how to structure your loan, whether it may be a bank statement loan, a P&L loan, or a 1099 loan.
Yeah, and Oscar, you bring up a good point. This is usually when I do a public service announcement. If you know ahead of time that you are going to be, taking the application with a self-employed borrower, right? Unfortunately, a good portion or good percentage of the loans we get they fell out because you wrote a pre-approval letter and you finally got their tax returns. The borrower told you they make $150,000 a year. Well, when you got their tax returns, they make $50,000 a year. Now they can't qualify for the house that they're already under contract, and earnest money is there. So that's probably a good percentage of the deals we get. So to keep everyone's hair from being on fire, if you know you are going to meet with a self-employed borrower, why not, yes, get their tax returns, go down that route. Also, get their bank statements and ask them for 24 months up front. We'll decide, Kim, Oscar, any of our other account executives, they'll decide whether we should use 12 or 24. And I'll let Oscar answer that question. What's the difference between 12 and 24? And if he says 12, he's off the call here. So, but we'll decide and go down those parallel paths. And I promise you, when you get their income back for their tax returns and when you get their income back from their bank statements, we're going to increase their purchasing power probably a minimum of 2, if not 3, 4, 5 times the purchasing power. And now you have options. And now you have options not just with your borrower, with your referral source, which I'm sure your referral source would say, hey, instead of shopping for a $300,000 house, we can shop for a $750,000 house. So Oscar, give us examples on why you would go 12 versus 24, and I'll try to fix my screen here while you're doing that.
Well, above an 80 LTV, remember guys, we go up to 90 LTV with no MI. There is a benefit to pricing. So if the loan to value is going to be greater than 80%, then I would suggest collecting the last 24 months of statements. This way we can calculate the income, and if they qualify with 24, they get that pricing advantage. Now, one reason why 12 months may be better off than 24 is because let's say that your customer has been in business for only 2 years. generally that first year you're ramping up. So their 24-month average may be less than their 12-month average, and that may make a huge impact when we're looking at buying power and DTI. And so we can use the 12-month option. And during that pre-qualification phase, that's when we can structure the loan. So at that point, let's say you submit 24 months and 12 is the best way to go, then you can just, when you're ready to register your loan and request disclosures, then you just choose the 12-month option.
Yeah, and I know Kim's screen is blank. I know she was frozen. Kim, are you there via audio?
Yep.
All right, perfect. So I'm going to ask you a question if you don't mind. You and I have been technically challenged. It's usually Oscar and his lights, but Victor's asking a question, and this is a legitimate question because, you know, half of you have not originated a bank statement loan in the last 12 months. So Victor, this is a great question, and I love that you're, you know, the transparency that you're bringing here is, I have to admit, I'm new to these, so they scare me a bit. But like you mentioned, I am seeing more and more self-employed borrowers. What scares me is qualifying their income. Just to confirm, you have an in-house team that will help us with this, correct? So Kim, if you can just, let's put Victor and the other half of the people who haven't originated a bank statement loan, let's put their, and then I'm gonna go switch to Oscar because I love the way Oscar says how he takes care of his customers. So Kim, talk about the income calculation on the bank statement program.
So we're going to go into it in a little bit on, you know, how to get pricing and submission and stuff like that. Once the pre-qualification has come to us on a bank statement program, we actually will submit it electronically to our bank statement review team for income underwriting. You know, right now it's taking anywhere from 2 to 24 hours to get that income back. And again, as I said before, once we get that income back, that's where, as account executives, we put on our hat and we sharpen our pencils and we're looking at the whole thing and how we can use this income to get it to work to issue a pre-qualification. But again, once that bank statement review comes back, we're good to go. And I'm going to give you kind of a one-off. Once we get that bank, say we had done a business bank statement program and the borrower owns multiple businesses and the one business isn't working, we can actually use 100% of the personal bank statement deposits with 2 business bank statements. So when I tell you that we're looking at every single possible way to get this self-employed borrower to work, you know, we're not stopping with all right, here's the income back. We're really rolling up our sleeves and digging into what it's going to take to get an approval out to you. Did I answer that?
Yeah, no, you did, Kim, and that's awesome. And you know, you might get 2 or 3 additional questions from Oscar or Kim, but guys, it's not to prolong the process. It's to really try to find a way to get your deal done. So Oscar, so you know, you always, and I know Kim does it because both of you guys are top producers. You know, if you have a first deal with the loan officer, let's say Victor, Oscar, you're going to do a deal with Victor. Victor, what are you going to do throughout the entire process?
Well, first thing I'd say, Victor, get in the pool. We're going to be your lifeguards. We're not going to let you drown. You know, the value proposition that we have, like Kim mentioned, is we're going to be your second set of eyes. You're not submitting a loan and never hearing from us again. We're going to hold your hand through the process. Okay, we're going to be here every step of the way. And the beautiful thing is that Kim and I have the luxury of doing this, which we love to do, educating the market on bank statement loans, because we have such a strong support team in operations. So throughout the process, you're not going to just have one source to go to. You're going to have multiple people to talk to and ask questions. But the value comes up front, where we're going to be reviewing your file to check if your client meets the initial program requirements. So trust us. You know, John said that sometimes we may come back with some questions. That's because we're doing that second or third level review and we're looking ahead, you know, so that we can avoid any sort of setbacks in underwriting, so that we can streamline the process. And because we know that Your value is also your reputation, to your referral sources, and also obviously you want word of mouth referrals too from those customers, and you want return customers. So we want to make sure that it's a smooth transaction.
Yeah, so Oscar, I'm going to ask you a follow-up to that because Lisa is asking, Oscar said to ask your client 3 questions. Can you go through those questions again, specifically number 2? So thank you, Lisa.
On a bank statement loan, when you have your initial consultation with your customer, you need to ask 3 questions. The 3 key questions are, how long have you been in business? And the reason for this is it's going to help you direct which option you're going to use on the bank statement loan, whether it's going to be our 24-month pricing, right, which will allow you to go up to the max loan to value of 90% if the borrower credit qualifies for 90. But if they've been in business less than 2 years, we have an option for those borrowers that have a business checking account. And if they've been in business less than 2 years down to 1 year, then we do have an option for them up to 80 LTV with a 720 FICO score. So that's what you want to ask that first question. The second question is, what is your business ownership? And the reason for that is because on the business checking program, we allow down to 50% ownership. On the personal checking program, we allow down to 25% ownership. And the ownership percentage does have an impact on the calculation. Because if your client's only entitled to, let's say, 60% ownership, and we're only going to get them 60% worth of the total deposits, net deposits over the last 12 or 24 months. And then the third question that's going to impact your calculation is you want to educate them on how we calculate the income. The lender, we're going to initially subtract 50% for expenses. We call it an expense ratio. Some lenders call it an expense factor. What that 50% represents is what we consider their expenses were over the last 12 or 24-month period for their business. We meet everybody in the middle, so basically we're giving everybody 50% gross profit off the bat. But we know that not all businesses operate at a 50% expense ratio. So for those businesses that don't, they have the flexibility of getting us verification of what that expense ratio is. It's a very simple letter coming from an accountant or tax preparer on their letterhead that tells us their ownership percentage, how long they've been in business, and what that expense ratio is. If it's less than 50%, let's say it's 27%, then it would read 27%. This way we can apply it and calculate the income.
Yeah, so a couple of things here. They're shameless plugs, but Jeannie's talking about, I'm doing my first bank statement loan with Oscar. And Terry and Charles have been wonderful. Their hand-holding is legit, and I appreciate them. And then right after that was Claudia. I can give a testimony that they are very quick to respond, explore every possible option to make the bank statement loan work. Jack was great. Shout out to Jack Stevenson. So kudos. So yeah, I'm not here to blow on horn. We will really hold your hand through that process. So, Victor started it. He's really hesitant on doing these, but hopefully, at the end of today, you'll feel confident that you're in the right hands and we can help you close those loans. I know we're going to talk about P&L, but we're coming up on 45 minutes past the hour, and a lot of people have asked, how do we submit a pre-qual? So if you have questions on the P&L, we will have your account executive reach out to you and clearly define what we need on a P&L program, and I apologize for that. That's more of my fault moderating this. So, but a lot of great questions, so we really appreciate it. So Oscar, let's talk about how to submit a pre-qual, how to get pricing, and then how to submit a pre-qual.
There's not a single loan that funds here that does not start with this step. And the beauty is that you don't need to remember your password to do it. You just have to go to the website and click right in the center there. It says non-QM quick quote. This is going to show you how you can price out your loan. So you're going to be able to view pricing, but this is also the first step for that pre-qualification that we discussed and how you're going to submit your bank statements, your 1003 unsigned, and credit report, whether that's the tri-merge hard pool or the soft pool that we discussed. So you're just going to begin by filling in all the details the same way that John is doing now. And it's really important. This piece is the most important one, guys, because it defaults to full doc, which is a loan with tax return. So you want to make sure to choose the correct income documentation that we're using. And it's going to be bank statements in this scenario. So you're going to choose bank statements. Everything else defaults as is. If you're going to be pricing out your loan borrower paid, it'll default to borrower paid. If you want to price it out lender paid, then you're going to select your lender paid comp plan. And once you're done making all the selections, it's going to show you the closest pricing to 100, if not 100, but then you can actually view the full rate stack by clicking view rates. And now we're viewing the full borrower paid rate stack. And at this point, you're not locking in a loan. You're not triggering anything. All you're indicating is to your account executive what you want us to use when we're looking over the loan for DTI. So you choose one of these options, and then you're going to click the blue select option button at the bottom. When you're done selecting, I'm actually going to give you a pro tip. Skip this step by clicking next. You can save some time. And then once you're done with that, you're almost at the last step. All you have to do is choose your account executive. If it happens to be me, just type O on your keyboard and it'll select me. Then all you have to do is fill in your information and upload your 1003, your credit report, and your bank statements in PDF format here at the bottom. Now, that bank statement bucket, that's going to capture all bank statements if your client sent you separate bank statements, the last 12 or 24 months. So if you know how to highlight them, you can drag and drop them directly in there. Just another tip here, if your bank statements are sent over in a zip folder, you're going to want to make sure to decompress it and move them over to another folder before you upload them here, because if you upload them directly from the zip folder, we won't have any data. It's going to look like it captured them, but it's going to say 0 bytes. So we will not be able to calculate the income because we won't be able to open up the data file. It's secured. So you want to make sure to export them before you upload them. And then one thing that I don't think that we mentioned yet, part of the pre-qualification process, for those, what was it, 53% who have done bank statement loans, and you're aware of the questionnaire, and some lenders call it a narrative. It's a quick questionnaire that's going to ask one of those important questions that I mentioned. What is your ownership percentage? It's for your client to fill out. Some of my customers will click this tab, and it's a fillable PDF, and they'll fill it out with their client over the phone. But it has to be signed by the borrower for verification before you submit your loan to underwriting. It's really important that this information is accurate because it'll follow the file, and you want to make sure that what they're disclosing for ownership percentage is what the accountant or tax preparer or their legal operating agreement or bylaws are going to verify, right? So you want to make sure that information is correct. But once you have everything uploaded, you're going to go ahead and scroll all the way to the bottom. If you have no additional comments, you don't have to add anything. We like to call this the confession booth. If there's anything that we need to know about the loan, please, this is for our eyes, okay? So if you haven't mentioned it over the phone, we just like you, we hear a lot of scenarios every single day. We can't remember it all. So if you can help us out and just give us a synopsis of what we spoke about, if there's something that we absolutely need to double check, include it here in this additional comments box, and then hit submit. Give it a second to say successfully submitted, and then you're done. You're in line for review. Give it 24 hours. We're going to get the calculation done.
If we need an exception on it, it might take a little longer than 24, but Oscar, you stole the confessional booth. We joke about it here, but it's really a safety nest, right? It's talking to Kim and talking to Oscar. They want to get your deal done. So please, please, please tell them everything you want on a deal. I still get calls, well, you're calling me, I haven't talked to you in a while. Tell me why right up front. Let's figure out how to make it work versus how, we find out that it can't work later on because, some things should have been disclosed and they weren't disclosed. So, so again, they're your confessional booth. You speak openly and honestly to them, and they've done a lot of loans between Kim and Oscar. They've done a ton of loans. So that probably, although these are self-employed borrowers, there are deals out there we probably haven't seen before, but they know those second, third, fourth level questions to ask to say, okay, this is a deal we can get done. I believe in it. Or maybe, hey, maybe this just isn't the deal for us or you or your borrower. So yeah, so thank you, Oscar. I know we're We've got about 10 minutes left, and this is the most exciting part of I think, we talk about serving an underserved borrower. Unfortunately, I believe our marketing portal is probably the most underutilized marketing portal in the lending business, and I hope I'm wrong. And hopefully each time we do one of these webinars, we get further and further away from that comment. So Kim, if you want to take us to the marketing portal, tell me where I need to go.
Okay. So in order to access the marketing portal, you do have to have broker login credentials to do this. And if you work for a company who actually does all of your marketing, as AEs, we can provide these templates to your marketing department as well. What's great about our flyers is they're non-branded. So it is all about you and your company. You will not see Angel Oak anywhere on these flyers. So there's a couple of other things that we can do thank you, John. So again, you can see that there's a place to upload your photo. You fill in your information. You can put your corporate logo on that. There's nothing at all about Angel Oak here. So I actually was helping one of my loan officers yesterday do this because we're doing a realtor presentation, and he really wanted to focus on a few flyers to talk about. So when we go in there, I'm going in as the underwriter for these programs, but we're talking about that LO, that company, and how they're going to help those realtors grow that business and not be afraid of these self-employed borrowers. And if you don't know, your best bank statement customer is your realtor partner, because they're 1099, they're self-employed. We probably get, I don't even know what the percentage is. We get a lot of realtor borrowers under this program. So it's just something great to walk in with a different flyer and talk about.
So it's 9% as of 9% of the loans we close here at Angel Oak under our bank statement umbrella, whether it's like Kim said, 1099 or truly bank statements, 9% of the loans we close are actually for realtors. Mm-hmm. So you get 12 in a room, the odds are you're probably going to get one of those to do bank statements. Who knows how many you'll get to do DSCR, mm-hmm. right? So I'm going to log in here because it already timed me out, Kim. So bear with me here for 1 minute.
Yeah. And I'll continue talking.
Yeah.
Once you have all of your information loaded in to that flyer, there's actually a drop down that you can choose different flyers. And I think somebody had asked about marketing to CPAs. We actually have a CPA flyer in there that you can put your name, your company logo, all of your information, and you can walk into accountants because, they want to help their borrowers. I mean, they're their secondary financial advisor when somebody's filling out their taxes. So we actually have specific flyers directed towards CPAs. So, again, this is free. Like, how often does somebody give you something for free? Like, absolutely free, doesn't cost a penny. All you have to do is get a login to get it. It's an easy button. We also have social media posts that you can use to put on your LinkedIn and your Facebook or Instagram. There's presentations here, but also don't be afraid to reach out to your account executive. We see it all. It's not just like these are our programs and this is what it is. We can actually help you and direct you on where to find this business. I mean, because we see it every single day and we're here to help you. As I said, tomorrow I'm doing a realtor presentation with one of my loan partners, and it's all about him and his company and how they can do the bank statement program. So it's, we're here to help you grow your business.
Kim, like you said, we have a bank statement social media post for borrowers. It's directed towards borrowers. We've put the content, we put the images there, and then we have bank statement content for directed towards realtors. You don't have to make this stuff up. I believe we have enough content on our marketing portal that if you really wanted to, you could probably put together a 52-week marketing campaign on all the different programs that we have. And we're going to probably in the next month, maybe 2 months, we're going to have a specific marketing webinar just to help yourselves market yourself to that specific bars. Like, and then we have an account executive, everyone knows him, Eric Morganson out west. He says, how do you find self-employed bars? Open your front door, you will trip over them. Every strip mall you go to, every landscaper in your neighborhood, whether it's a roofer, whether it's, hey, I know when I get home today, I'll have 2 cards on my front door about roofers or tree pruning. You really don't have to look that far. It's pretty much out there. And Kim, you briefly touched on this. I want to go back to that, the realtor presentation, because and I'll let Oscar join in here too, because I know he does a lot of them too. Talk about that. Oh, hold on. What did I? Presentation. Sorry. This is all pre-canned. Talk about it, Kim.
So again, if you wanted to try to do this on your own, we actually spell out how to set up a realtor presentation and how to go through the programs. A lot of times when I'm doing it, I tend to go off script. It's hard for me to read and talk at the same time. So I go off script and really make it about the realtors, because, when you have your realtor partners, there's 2 things that they want to know: how quickly can you close it, and what's in it for me. So when you're doing this realtor presentation, it's really great because you can really make it about them. And, when you're going through, we're going to help you capture more purchases, especially for your self-employed borrowers. When you have an underserved borrower, they're more loyal than somebody who can walk in anywhere and get a loan that fits into the box. They're going to refer all of their friends and families. So it's really important for realtors to know that once you've been able to secure this type of borrower, they are going to be repeat customers and they are going to refer you business. So, these are really great just to go through and walk into an office. Everybody out there is looking to do something different and something new. Most LOs are talking about rates and services. How great is it that you can go in and talk about a self-employed borrower, which realtors are, and how it can help them capture more business, and how you can actually help them with their own personal business. It's just something new to talk about.
Yeah, Kim, and you mentioned it, you'll go in there, you and Oscar or any of our other account executives will do it live, or we'll do it via Zoom. And they walk in there, and I jokingly say they walk in there like the witness protection program, right? They don't say anything about Angel Oak. They're not wearing a pin. They're not bringing their cards. They're speaking. I'll use Victor because he opened up and asked a lot of great questions here. So Victor, if Kim's there presented on your behalf, she says, I'm just one of Victor's investors. And after she gets done talking about that self-employed borrower for bank statements, what are you going to do when you find that self-employed borrower? Kim's going to go, you're going to reach out to Victor. What are you going to do when you're looking at that investor who doesn't want to provide income or job information? You're going to call Victor because we have Victor, we're his investor, and we have a debt service coverage ratio program. Oscar, I know you're really aggressive on the marketing spot. We've got about a minute left here. Talk about anything else you've done for realtor presentations.
I've had I'm grateful that I've actually heard some of the initial calls, when a customer calls a realtor to set up a presentation, and some of these are complete cold calls. And the one call that I have not heard anybody decline a meeting or presentation, I'm going to give you the script right now. So what you want to do is you want to take the average percentage of commission that a realtor makes in your market. You also want to use the average purchase price in your market. And then you want to make a phone call and multiply that information by 12 months. We're starting this year. So you're going to call and set up a presentation to educate realtors on how they're going to grow their commission by whatever the solution was there at the end of that equation. Okay, let's say it's $120,000. I bet you that nobody will say or decline a meeting with you if you're going to show them how they can grow their commission by $120,000 this year. So in fact, they should pay you for your time. They should take you out to lunch. So,
Easy with the takedown.
so, you know, the advantage of working with us is we can do that with you too during that call, you know, to save you some money and really capture an audience. You can, because we also have access to Zoom, you can ask your AE to send you a Zoom invitation. This way, there are no barriers to someone showing up to an office. There are no excuses. They can tune in on their phone. So you may have more of an audience there. Just let us know the date and the time. We'll set up a you know, just a trial run two days before with you. We'll go over the program. We'll, anything that you want to add, anything that you want to subtract, and then we'll knock it out of the park the day of the presentation.
Yeah, Oscar, you know, the only barrier, as you mentioned, is not getting started. And I hope we've eliminated all those hurdles for you to feel confident enough working with Angel Oak, whether it's Kim, Oscar, or any of other account executives across the country, confident enough that you're willing to put, you know, your marketing plan, your commission checks in their hands to help you close. Like Oscar said, you know, I challenge anyone, you know, we could put that type of extra cash in your pocket this year. If you're not planning to market non-QM as part of your marketing plan, you're missing the boat. We're probably over here time-wise, but I did put my contact information in there. We had someone behind the scenes, thank you, Moses, answered a lot of questions too. So, but if you want to reach out to me, I'll put you in touch with your account executive, or you want to bounce off ideas. Danny, one of our participants here, attendees, he said, do a 50-mile search on restaurants. You can go out and market to them, have good food and market, you know, so I appreciate that, Danny. So thank you so much for that. So Kim, before we sign off, anything in closing, and I appreciate your time here today.
Yes. I always like to close this. Before you say no to an applicant, please call us and see if we can make it a yes.
Yeah, that's awesome, Kim. Oscar?
If you target your outreach to this audience within 45 days, you're going to be taking bank statement loans, more bank statement loan applications, whether you were part of that 47% that hasn't done one yet or that 53% that has. If you market to and network with business bankers, accountants, and tax preparers, and anybody in financial services, you will do more. You're going to do more this year. You're going to do more bank statement loans than you have in the past.
Yeah, thank you, Oscar. So, hey, again, just this is recorded. We will get this out before end of day tomorrow. If we didn't get to a lot of these great questions, and thank you so much for your participation. If we didn't get to any of your questions, we will get your account executive to reach out to you. So on behalf of everyone at Angel Oak Mortgage Solutions, thank you for attending today. If you've closed loans with us, thank you for your business. If you haven't, obviously, you've got these subject matter experts that will hold your hand through this entire process. Give us a chance, and good luck to everyone in 2025. Let's look forward to blowing the lid off this thing. Thank you, everyone. Oscar, Kim, again, thank you for your time. I really appreciate it and appreciate your guys' knowledge and helping me go through this today. So thank you so much. Everyone have a great day.